Taiwanese index is up 0.3%.
That the skip, I shouldn't call it a skip, the decision makes sense.
Bain Capital is a seller. The book was launched last evening.
We're still trying to figure out how we would go about in implementing this.
JP Morgan has written on the Indian hospital space. They've initiated coverage.
It's absolutely flat as we begin opening today.
Mid and small caps have given about 10% odd returns.
India is one of the most undertreated countries in the world.
Growth is proving a lot more resilient.
The company announced that they will be acquiring a land for a luxury project in Kolkata.
Both the FTSE as well as sensex will actually see the rebalancing happen.
And what we're seeing are small incremental gains on the screen.
This is an important issue that SAT would be hearing today.
The premium is a key priority for us in Hero MotoCorp, and we're going to continue to invest there.
The temple of Dwarkadhish has been shut down for devotees.
So 22 points lower on the Nifty, and the Sensex is lower by 130 points as well.
Well, that was the day so far. You're with us here on a fresh new edition of Closing Bell, the last hour of trade this Thursday afternoon. We are coming to you live from the CNBC-TV18 News studios. I'm Prashant. With me, my colleague Surabhi here in the studios, and Mangalam is joining us from the newsroom floor. Guys, hi, good afternoon. The day after the Fed, and it is, slightly lower? 50 points, 50 points on the Nifty, that's about it. So nothing dramatic. But it's got a tinge of red since the morning. I mean, a tinge of profit booking from the morning, and that has been visible. The Bank Nifty, by the way, is trading just under, actually I shouldn't say just under now, because it's about 100 points under the 20-day moving average. It's been around that level for the last 4 or 5 days. Sometimes up, sometimes down, but always within 20, 30 odd points. It's a bit more decisive, so let's watch the close. The 20-day comes in at 43,994 now. Mid-cap and small-cap indices are higher. The last I checked, they're up about 0.25%. But market breadth after, I think, a few days at least, is negative. So more declines as compared to advances. And I said this in the morning, often, you have the, not the real reaction, but a bigger reaction to the US Fed decision coming in on day 2, not on, the D-Day. So we will see whether we get a surprise in terms of new interpretations, etc., which the market finds and reacts accordingly later out of the US. But at this point in time, it's not very much to go by. A market taking a bit of a breather. We're at about 18,700 on the Nifty. Surabhi.
Prashant, now actually markets on the western side of the world, they're all trending lower, whether you're looking at Wall Street futures, where there is some selling that's evident. For instance, NASDAQ futures are down about 0.5% right now. Europe, the markets that are open and trading, again, the color is pretty negative out there. CAC is down about 0.5%. The DAX is down about 0.25%. So markets are just sort of digesting this hawkish pause that the Fed delivered yesterday. Back here at home, the selling on the banking side of the market is something you can't ignore, because it's not just a choppy trend here and there. It's been a decisive one-way down move on the Bank Nifty, and it's been gathering momentum on the way down. And whatever little recovery we've had, it's gotten sold into. We've seen that twice. Twice the recovery on the Nifty Bank has been sold into. So this has become a trend down day on the banking index. And we'll discuss this with our guests as we go forward. However, on the upside of the screen, you do have hospitals, not hospitality, hospitals and healthcare. That's the one space that's come out right on top once again. And Apollo, along with a lot of the other hospital stocks, is really up and about. Days high on that one, 52-week highs and counting on this name. Divi's is the other one. A pretty smart show there as well, 2.5% up. So that's strong. There's Dr. Reddy's, there's Cipla. So it is just pharma and healthcare literally all the way today. Beyond that, after 4 or 5 sessions of profit taking, some of the auto names have found buyers again. M&M Maruti would be case in point. There's some buying on the consumer side of the market, Nestle, ITC, Tata Consumer, Britannia. So healthcare, you've got, of course, consumer and some of these auto names. But banks are down and out. Banks and IT, didn't mention IT actually. Check out Infosys, TCS, most of those names as well. Pretty weak. So Mangalam, I think the trends are becoming a little more defined and clear on the large cap side of the screen at least.
They are indeed, in fact, every time we cross past that 18,750 mark, it's happened on 3 occasions at least in the last 8 or 9 trading sessions where we found ourselves hitting a bit of a wall, so to say, and it's difficult to, climb that wall. So if you're just taking a look at the highs on the Nifty, today was within, touching distance of 18,800, 18,794. Yesterday was 18,770. Last week it was 18,778. So we have been facing some resistance here, and the Nifty Bank has been trading below the 20-day moving average for most part of today's trading session. And as we move towards expiry, that selling has only gotten pronounced, and that'll be interesting to watch out for, mainly because the Nifty 18,700 put writers still haven't given up hope. There is still a premium of almost 25 rupees on offer out there, telling you that most of the bulls still believe that 18,650 to 18,675 will be a bit of a support zone. But the way the Nifty Bank is falling, and the fact that the Nifty IT index, like you pointed out, isn't supporting, if we were to go below that 18,675, then all those put writers will have to unwind their positions, and we may see further weakness in the last hour of trade. We have seen a fair amount of writing at the 44,000 call on the Nifty Bank. We've seen some writing at the 43,800 put earlier, which will now be unwound because all those guys have also been caught on the wrong side. But generally, a lot of these cash stocks are doing well. The mid-cap index is still in the green, not falling as much as the frontline indices. And the cash stocks beneath the surface are doing extremely well. Retail really stands out for me. I'm looking at a big move on DMart, up almost 4%. And the volumes on DMart today are nearly 2 times the average that we've seen in the last 10 days or so. Spencer's Retail is the other one, which was down and out earlier, but this month has gotten back its funk, almost 18% higher in the month of June, and 7% of which has come today itself. GE Shipping is doing well. Supreme Petro is the other one, which is up 9% odd. So yes, we do have a bunch of stocks in the cash market which are, jumping around.
All right, point taken, Mangalam, and we'll come back to some of these in just a bit. But for now, let's quickly tell you what to do as we enter the last 60 minutes of trade. Mitesh is with us to help us do that. Mitesh, hi, good afternoon. A little bit of a pullback, 56 points, and the color is red. Shades of red across the board, across markets, across mid-caps as well, where there is slight amount of profit booking. What are your views? How are you reading the price action today?
Afternoon, Prashant. I think, for the last 2 days, I think on our programs we've been discussing and you've been highlighting, and as well as I also pointed out that the Bank Nifty is the pain point. I think it stopped participating on the upside, and if it breaks 43,800, it should at least test 43,500. I think it's done that. It's 43,500, 450 is a mild support area, but I believe that, once this is taken out, the Bank Nifty could have a bit more of correction. The setup on the indicator chart is slightly on the negative side. So we'll assume that 43,300 and then eventually 42,800 would be tested. So stay mildly negative. I think if you have long position on the index, time to take them out. Bank Nifty, we were never long. Index also, we have exceeded the long positions. And maybe, look for some shorting opportunities against the stock which you are holding in the financial sector. So I have a sell on ICICI Bank. It was a call earlier as well. But now can be sold afresh with a stop at about levels of 937 for targets of 906 to begin with. And Federal Bank is another one. That's a sell with a stop at about levels of 124. Look for targets of 117.
Since you've got those sells, just to revisit the levels, Mitesh, sorry I missed that. What do you make of this 500-point sell down on the Bank Nifty? And from a slightly more longer perspective, in the next couple of days, getting into next week, what's the chart setup on the Bank Nifty looking like?
Yeah, so I was talking about Bank Nifty itself. Would be that, we had been suggesting some kind of shorting position on the Bank Nifty, saying that if it breaks 43,800, 43,500 to about 43,300 is the target area. I think we are in that range. But my sense is that the way indicators are shaping out, eventually we should break 43,300 as well and head towards 42,800. So there's still about 600-700 point kind of a downside left in the Bank Nifty. Though around 43,300, there could be a mild pullback, some short covering, but overall the structure is weakened. And now I think, I'll look at shorting the financials or the call options on the Bank Nifty.
Got that. Thanks, Mitesh. We'll come back to you in a bit and look at some other trades and ideas as well. We've discussed what's down in the market, that's banks. Let's also now talk about what is up, and that is hospitals and the healthcare space. Let's focus on hospitals in particular, because JP Morgan came out with a note earlier. They've initiated coverage on a whole range of hospital stocks. striking a pretty optimistic note. We have Ekta joining in with some of the highlights from this. Ekta, so what makes JP Morgan so bullish?
Thanks for that. Well, yes, definitely a bullish report which has come in from the broker JP Morgan on the entire Indian hospital space. They have initiated coverage and they say that it is ripe to absorb expansion. Apollo Hospitals as well as Fortis is an overweight call for them. And Max Healthcare and Medanta are both neutral stances for JP Morgan at this point in time. So what are they bullish on? Factors such as secular growth, supply shortages which offer promising growth prospects, sustained demand going forward, occupancies which are at near optimal levels, and that results in the necessity for expansion for a lot of these hospitals, and profitability according to them has improved, and that is likely to sustain. So they are estimating a 19% EBITDA CAGR over FY23 to FY26.
All right, good growth prospects for the hospitality sector, or rather the hospital sector, and also perhaps possibilities of M&A out there as well. We put forth these questions to Sandhya J, who's the Group CFO at Narayana Health, to discuss more on the increase in the interest in the hospital space as well as how the business momentum itself is shaping up. Let's hear her out.
The cash flow positions of many of the hospitals significantly improved. And we also believe that COVID's kind of made people far more health conscious. India is one of the most undertreated countries in the world, where people don't come, they feel that going to go for treatment is like a bad thing. So people don't do proactive checkups. People only come for a health issue when it's really very serious. So it's a very underserved market. While we are not averse to M&A, but we will be very careful. We won't throw money at a very high-priced asset because then we'll not do justice to the patients who walk in. We won't be able to continue to give them the kind of affordable care that we are giving them today. We also have sufficient headspace in our borrowing as well. So depending on how we want to deploy the cash, we will make a judicious choice between internal accruals and borrowing. Last year, it was about 40-60. We spent 40% of our capex from internal accruals, and maybe we will maintain that kind of trajectory into the current year also. As far as where we want to spend, we want to first expand in our core markets, where we have a significant brand dominance.
All right, that's about Narayana Health. But just take a look at Apollo Hospitals. A big rally is underway out here. Apollo Hospital has actually been on a tear ever since their numbers, and it's recovered a goodish bit, almost 40% from its 52-week low, and 18-20% in this year itself. So the hospital sector definitely doing well. But what's also interesting is the healthcare space, where we're seeing Metropolis and Dr. Lal PathLabs. Now, in terms of price move, there is not much to show. But if you just look at it beneath the surface, the open interest surge on these counters is rather huge, around 11 to 12% surge in the July futures, the June futures of these counters. So Dr. Lal PathLabs absolutely flat right now. Metropolis doing well, but we have seen an 11-12% jump in the open interest. So maybe some positions being added out there as well. Let's welcome Deepak Shenoy, who's the founder of Capital Mind, joining us now on the show. Deepak, good afternoon. We've been talking about the healthcare space. How would you, deploy your capital, if at all, if you like, in this healthcare space? Do you look at it through, these path labs? Do you look at it through hospitals? If hospitals, then do you chase the big ones like Apollo, or maybe some specialized ones?
Well, thanks, Mangala. I think we have an investment in Narayana, so a little bias there. And that too is because of a general rise in care costs and in patient awareness, and their ability to come and use such hospitals in different ways. Perhaps as investors, we're a little amoral. We buy sugar companies, we buy tobacco companies, and then these things give people health problems, so we buy hospitals. So we feel, it's a little embarrassing to say it, but I think hospitals will continue to do well. In Narayana's case, it's also the fact that they're expanding in Cayman Islands, where because of relatively high medical costs in the US, their hospital tends to be a relatively cheaper and geographically closer alternative to anything that is in on the mainland, and that's where their returns per bed are significantly higher than what they're getting in India as well. And a bunch of other capex is on the way. So we prefer the smaller hospitals here. Though I do think diagnostics will have a tougher time, because I think a lot more devices will come in the market, which will allow diagnostic centers to have a lot more competition than they currently have. So I think, while there's a lot of geographical reach right now, I don't think diagnostics is a great way to play healthcare. I'd rather be in the hospital space, and they're in the smaller and faster growing hospital space.
Who would have thought, right? Cayman Islands, people go there for tax purposes, but also healthcare. But Narayana has operations, and we kind of talk to them regularly about it during quarterly numbers, etc. Deepak, you might want to listen to the next one. This is HEG we are talking about. The stock is a big mover today. It's up 12%. It's up 36% so far this month. InCred, the broker, has initiated coverage in the stock, and they have a interesting angle that they are bringing in. Usually when we talk about HEG, we talk about demand from the steel industry, but there's a new industry perhaps which is going to be a big end user, electric vehicles and batteries. Sonia is standing by with more. Sonia.
Well, absolutely. As you rightly pointed out, it's a big move that HEG has seen 36% in the last 1 month. In fact, if you look at it, just for the uninformed, HEG manufactures graphite electrodes, which are generally used as a raw material in steel production. Now, global decarbonization is a big emerging trend, and it looks like HEG could be a recipient of that, could be the positive beneficiary of that. HEG is getting into making anodes for lithium-ion batteries, and as we know, lithium-ion batteries are used in electric vehicles. Electric vehicle is a high-growth area for, both in India as well as globally, and that could be a big growth trigger for HEG. InCred has initiated a coverage on the stock with an ad rating. They have a target price of 2462 on the stock. However, given all the positives, the growth that HEG will see is just about 6% according to them, which is a compounded growth that HEG could see from FY24 to FY26. But yes, a couple of positive triggers that are working for HEG now. Back to you.
Okay, that's a big move on HEG today, 11% on the upside. Thanks for that, Sonia. Deepak, hi, good afternoon. Any interest in some of these graphite electrode makers? Let me expand the scope of the question. We've seen quite a bit of a metals rally as well. Not so much today, but yesterday when China started moving on rate cuts. So would you sort of take any bets here at all? Electrodes, metals in general?
I think metals, yeah. If there is an increase in metal consumable production, which is where your refractories or graphite electrodes will kind of benefit. But it's a very, very difficult market. And, when you have shutdowns of certain plants in the world, that's when you might actually get an increase. China's return may not actually be very beneficial for steel because most of their stuff does not use graphite electrodes. It's mostly the older process, which based on iron ore itself. Graphite electrode is about melting old steel and then remaking it back. So I think China's return will actually be negative for graphite electrodes, but positive for perhaps refractories and other such elements. But I think metals, I personally don't think this is a great time to buy it because as the US has indicated, there will be 2 more rate hikes. There's going to be possible cut in global demand in general. And I would say this may be not such a great time to take a metal call. I'd wait for it to bottom out and they're nowhere near their bottom on the cycle. So, I'm not very interested in the metal, and I'll usually be there only for like a short period of 6 to 8 months. But on HEG itself, I think, this is interesting that they're talking about anodes because the manufacturing process is very different from what they do right now. The raw materials are very different. It's a much finer form of carbon that they need. And sourcing that is extremely difficult, given that HEG does not have any, capabilities of actually manufacturing any of the raw materials. They'll have to source it. It's a very difficult element to source as well. So, I think the amount that they'll get from this business will be such a small part of their overall business that it may not be relevant for the next 2 or 3 years. but the market thinks otherwise. So we're not really interested in either graphite or HEG at this point.
Okay, got that. Stay on, Deepak. We'll have some more questions for you. Right now, a very quick break. We'll come back. We'll also be chatting with the Alpha Manager of the day, Ronak Onkar of PPFAS Mutual Fund will join in. Welcome back. Here with us on Closing Bell, and the cut's getting deeper. 74 points down on the Nifty now. I mean, you can't just wish away or write away the decline. It is very clear and pronounced as we speak, and blame that on the bank Nifty, which is down a little over 1% in a quarter now. By the way, the mid-cap index is fast and quick losing ground as well. We are just about 20-25 points up on the mid-cap index as we see things. Well, speaking of mid-caps, here's one stock that's been in the news today. Godrej Properties has been moving higher. The developer is also to acquire a land parcel for a luxury residential project in South Kolkata. We have Sonal with more details on this one. Sonal?
Thank you so much for that. Well, Godrej Properties had in trade on the back of a land buy that the company has announced, where they will be developing a luxury project in Kolkata. The developable potential is around 9.8 lakh square feet, around 1 million square feet, that is, in this particular region. And the revenue potential that they have from here is around 1,200 crore rupees, and that is what the street likes. They have acquired 7.44 acre of land, that is from the local government, and on which they will be developing this property of around 1 million square feet. And this will be the second luxury project in the city of Kolkata, and their pan-India expansion continues, something that the street has always liked about Godrej Properties, and that's why at a 52-week high level, and realty in general has been doing well. So riding onto those gains is Godrej Properties today.
Okay, absolutely. It's a good mover in a market that otherwise seems to be struggling. Thanks for that, Sonal. Deepak, any interest in real estate? And if yes, would you go with some of your home companies, the Bangalore boys, or Delhi, DLF, or maybe a Godrej?
I think, honestly, Godrej is probably one of the, it's relatively more richly valued also, because relatively governance is better. And I say relatively because real estate is one of those places where governance is, it's almost a bad word there. But, the problem, of course, I don't understand valuations of real estate companies sometimes, because when the going is good, they don't seem to make enough profits, and the going is bad, So somehow the profitability doesn't seem to reflect into most of the real estate companies' balance sheets. But within the space, I think you've had a good set of players, and Brigade and Shobha in the south, Godrej and Oberoi in the west. I'm not particularly keen on looking at DLF, given all the history that's in that stock. But I think these would be the players I'd look at. We don't have any investments in real estate at the moment. Maybe we've missed this run, but that's okay. I don't think this will. I mean, given these interest rates and where we are, I don't know if the markets are going to be this kind for too much longer.
All right, let's ask you about another sector. And, you said that it's confusing to value real estate companies. Over the last 6 months or so, I've been confounded in looking at this sector. I just don't understand whether the going is good. Will it get better? How do you value these players out there? Yes, I'm talking about the movies space, the cinema exhibitors. There's just one investable idea, so to say, post the merger. It's PVR Inox. That's buzzing in trade today. It looks like the big blockbusters which are lined for the next, this weekend itself. There's Adi Purush. The street believes that maybe a lot more people will go ahead and watch that. Let's ask Surbhi, who's our resident expert on cinema exhibitors and movies. Surbhi, are you going to watch Adi Purush? And what is the verdict on it? What are the estimates on the footfalls there?
So I'll be waiting for the reviews before I go to watch it. But it seems like Adi Purush is expected to have a blockbuster opening. The advance booking shows that they have already sold over 4.7 lakh tickets for the weekend shows. And the weekend, there's an expectation of close to 50 crores of collection on day one itself. In fact, Q1 box office collections are also pretty good, especially the month of April. They saw a box office collection of 620 crores, which was higher by 55% on a month-on-month basis. For the month of May, it was a little tepid. The box office collections were only close to 400 crores, down by 36% on a month-on-month basis. So let's see where June goes. June has a pretty good lineup. Apart from Adipurush, there is also the Kartik Aaryan starrer Satya Prem and Flash, which is releasing. So let's see how June is and Q1 for them.
Right, so just hang in there. You are our Gen Z represent. So when was the last time you went to a theatre to watch a movie? What movie was that?
It's been a while, so I'm not I think it's been at least over 3 months that the last time I saw a movie in the theatres.
3 months and counting. Deepak, what's your verdict? I mean, the movies are releasing. Some of them look promising as well, but I don't know for a lot of people who've actually been to the theatres in recent times. How do you value this space?
Actually, it's a very interesting space. I mean, I put it into the tourism and entertainment sector. I think India, as it evolves, will get a lot more active over there. We have really, options for entertainment are pretty much Bollywood and cricket. The cricket IPL is over, so it's over to Bollywood, right? So for the most part, when you go to a flight or to see, check for flight tickets now, it's all full. Hotels are full. That's because people are, taking holidays much more inside of India and so on. But within the city, it almost always is a movie that's the more entertainment thing. The actual movie is irrelevant. It's the fact that you go and watch it with your family, the whole thing that goes with it, that forms part of the cycle. I think this is a very positive long-term cycle. However, as you said, the valuation of these companies are very, very high. I don't know how they will grow into that valuation. And given their quasi-monopoly and they can't expand too much in terms of acquisitions or even setting up new theaters in certain places because of merger-based restrictions, I would think most of the growth is maybe 4 or 5 years into the future. So, while I like the space, I just think these players are overvalued. The movies could be blockbusters, but, just like real estate, the movie makers never seem to make, the listed movie makers don't seem to make enough cash flow for them to be investable entities. Maybe PVR and Inox or the merger combined is better, at least in terms of cash flow projections that flow to them.
Deepak, do you have any views on markets themselves near term? Are we at a point where maybe we start to see some, serious profit booking, or you think that's unlikely? So far, it's always been, dips have been bought. They've been very shallow.
Yes, I know. The thing about the market is the valuations have come down significantly from 24 times earnings to maybe 20 times earnings in the last 16, 18 months. We also think that, the markets tried to break through this level. The last time it didn't succeed in December 2022. Usually when markets come back, and meet these resistance levels, they just the behavioral trend is if they break through this, all the sellers will be gone, and then you'll find all-time highs on the exchange, on the market, much to people's surprise. I think that is where the market's headed right now. Market's headed up. Now we're a fund manager, so we'll always say that the market's only going to go up, right? So I don't see any real near-term negative triggers that will hurt India. I think the world has issues. America is going to raise rates, there's problems in Europe and so on. So that might drag us down a little bit, but I think overall the India story is still quite strong right now. We'll have to weather a little bit more in terms of whatever happens in the next few months from a worldwide macro scenario. But I think, we're poised to grow a local manufacturing, domestic, like I said, tourism, entertainment, and that kind of activity. These are not very heavily represented in the Nifty. So you've found the mid caps and small caps making new highs already. So I don't think it's a time to just take profits. It's the time to sit tight because this is when, the ride gets, faster most of the time.
Okay, got that. So you're keeping the faith and staying optimistic on the market. Got that point, Deepak. Thank you very much for joining us. Always great to have you on our shows. We look forward to the next conversation. Well, the news is that we are still looking at about a 70-point drop on the Nifty. The bank nifty is trying to stabilize, but still about 500 points lower. So let's see how this goes, because we still have half an hour of trade left. Ronak Omkar, co-fund manager, equity and head of research at PPFAS Mutual Fund, now joins in. Ronak, first and foremost, congratulations to all of you, the entire team at PPFAS, for that milestone of 10 years, right? And must say thank you for those little, sweets and the chocolates that you sent all of us here at CNBC-TV18. Appreciate you spelling out, of course, all of your themes, as you always do on our shows. Now, with that, I just want to straight away hit the ground running with the one stock that became really controversial in between, and it is in your portfolio. And I'm talking about IEX, right? We saw the 20% decline and the whole debate about whether the business model itself is getting questioned with these new norms that are being proposed. Your thoughts?
Thank you, Subi, for the wishes, and thanks for having me back. So with IEX in our portfolio, which is the flexi cap scheme, it's about less than 2% of the position. IEX has an interesting history. It is actually a monopoly power exchange with bulk of the volumes going on IEX. And interestingly, the regulators have been trying to bring in some competition, make sure that there is not monopolistic pricing, or even create a deeper ecosystem of power exchanges in our country. And this is nothing new. This happens across many countries. It's already played out in Europe in a way. And the consultation paper which people refer to regarding the market dispatch mechanisms or volume pooling, that has been around in discussion for a very long time. So, of course, it may affect in the short term a company like IEX if the implementation happens. But right now, we are still at the discussion stage. I don't think there is anything concrete that is out there. And there are a lot of possibilities in the air, but to really distill into a probability of what is actually going to happen with a high degree of confidence, that we don't know of right now. Although the business model is very interesting, monopoly status is there, network effect is there for a company like IEX, and it remains to be seen how that extends when new regulations come in. And if you see the history of the power exchanges, I don't think there is a standard line we can draw that if this happened here, it happens in India as well. Because every country, every continent has gone through its own evolution of how these exchanges have to be created. But that said, if you have a renewable power coming into the grid, and if you need to make sure that renewable becomes a larger part of the power, then you need to have shorter term contracts, and you need to move away from some of these longer term power purchase agreements that we have been used to because we are using thermal coal over a period of time. So it's a long runway for a company and even the country in terms of power dealing on the exchanges, and it remains to be seen how it affects in the long run. I think we are more worried about the longer term rather than the shorter term changes in how the exchanges are run.
Right. Ronak, sorry, you own IEX in your portfolio?
We do own. We own about less than 2% in the flexi cap and less than 1% in tax saver.
And you're staying put, basically, as far as I can tell, right?
Yeah.
No changes to that. No, got that. There are some flashes at the bottom of the screen which we'll address with our reporter in a bit from now. So sources tell us that the Ministry of Corporate Affairs has initiated investigations against Hero MotoCorp. So more details. DG investigation under the MCA has taken cognizance of income tax probe to initiate action. But the underlying matter is something which we will get to in just a bit from now. So Hero MotoCorp on your screen, I think it is reacting with a 2.5% cut coming through. So that is Hero MotoCorp. But as I said, we'll have more details about what the matter is with our reporter in a bit from now. There are more details being put out as we speak. Ronak, let's just, you heard Deepak Shenoy was with us a little earlier. And I'm generally in conversations with a lot of people who've done well with mid caps and small caps. Two lines of thought. One is that you just stay put. The ride, perhaps, as Deepak was pointing out, will get faster, if anything, from here. And there's another line which says maybe, time to book some profits. I don't know if you have a view.
It's hard to know how fast it will be or which direction it will go in. So if you look at what we are doing, we are investing in the companies we already like, which are in the portfolio. We are adding to those. We haven't added anything new meaningfully in any of our schemes. In both our schemes, equity schemes, we are on about 16 to 18% in cash. So these are basically residual cash holdings which can be deployed if something attractive shows up on our radar. But at the moment, valuations are stretched across many sectors. And I don't think there is very, very attractive ideas out there right now. But yeah, let's see how the market plays out.
Okay. Fair enough. Got that. Now, let's just address that Hero MotoCorp story. My colleague Timsy is joining us right now on the phone line. Timsy, tell us, what is this matter all about?
Well, the matter pertains to an investigation order that has been issued by DG Investigations under the aegis of Ministry of Corporate Affairs. Now, this comes after the Income Tax Department taking action against Hero MotoCorp. And since we understand that there is a MOU between all investigative agencies for exchange of information, taking cognizance under that MOU, Ministry of Corporate Affairs, under public interest, there are two sections under which investigation orders, books investigation has been ordered by DG Investigation. This is under Section 2161C and Section 210 of the Companies Act, under which investigations have been ordered against Hero MotoCorp. Let's see now what happens is Hero MotoCorp will have to answer the questions that Ministry of Corporate Affairs will raise on their books of accounts regarding beneficial ownership of shares, etc. That's what these sections pertain to. Let's see what happens finally, because now a detailed inspection of books, accounts, shareholding, etc. will be undertaken by Ministry of Corporate Affairs.
Okay, got that, Timsy. I'm just reading out here some details that our colleague Parikshit has also shared with us. Section 216 of the Companies Act is investigation of ownership of the company who have or had beneficial interest in shares of a company who have been beneficial owners. Okay, markets are really sitting up and taking note of this. Timsy, just to understand, you said that this is a separate investigation that the Corporate Affairs Ministry has started. The income tax investigation, has that concluded? I mean, is there any correlation, or are these two parallel events that we're talking about?
Because only on the basis of IT department, because that was the first investigative agency that took action against Hero MotoCorp. Their investigations are still underway, and not to forget that under exchange of information between various government agencies, that is where exactly MCA has come into picture. And now MCA will take a separate investigation, which will be under these two sections. Section 210 is where it empowers DG Investigation to initiate investigation and issue orders. And then Section 2161C. 1C is under public interest. That is where beneficial ownership comes into picture. And they say that since the company is public listed, that is where public interest is there of beneficial ownership of shares. And under these two sections is what the investigation will now begin. Later on, if in case they feel that there are further sections that need to be invoked of the Companies Act, DG Investigation has the power and the mandate to invoke those sections. But yes, as of now, a preliminary investigation order has been issued. We understand from sources that these orders were issued on 5th of June. When we sent a query to Ministry of Corporate Affairs formally, they did not respond because that is something that normally these agencies, they don't answer queries formally because these are investigative matters and under law they are not allowed to share information. So all this is source-based exclusive information that we are getting. That 5th of June, orders were given to the company. Now the company has to get back to Ministry of Corporate Affairs, answering their questions, allowing them to inspect their books.
Absolutely, Timsy, for the benefit, Timsy, for the benefit of our viewers, I just also want to place on record the statement of the company is already on the screen as well. So let's also keep that in context. Hero Moto is saying we have not received any communication with this regard and hence cannot comment on the content of queries. We will provide all information if and when it is sought from us by any regulatory authority. So, Prashant, the company is saying, well, they've not received any of this, any of these queries, I guess, as of now at least.
Absolutely. Ronak is still with us. Ronak, thanks for waiting. Sorry, just to go back to what we were discussing earlier, right? I mean, you said you're sitting with about 15-16% of cash. Is that?
Yeah,
is that? I mean, compared to the industry average, that is very high. But compared to your own kind of track record, is that at the high end?
I would say it's somewhere in the middle. So when the last mid-cap and small-cap rally happened somewhere in 2017-18, we went as high as about 30% in cash. So this will be somewhere in the median.
Okay. 30% cash. I mean, you guys stand out. as compared to what you do and how you do it. Just Ronak, just a quick word. You said you're not buying anything new. You're adding into what you already have. But where, what names there, most specifically, most aggressively?
So not aggressively, just incrementally adding to the banks, the private sector banks we own, some of the IT companies that we own. Just these two areas where we find the valuations are still reasonable to add more.
Private banks and?
IT services.
IT services. Okay, got that. Fair enough. We'll leave it there, Ronak. Short conversation today, shorter than usual. Appreciate you joining in and taking us through what you're doing out there. We'll take a quick break here. As always, we get you what's happening in our segment, D Street Chatter. Nimesh will be with us and we'll get you short-term trading ideas with our technical experts as well. Stay tuned.
Virtually at the low point of today's trading session, so this week's weekly options expiry seems like it may belong to the bears after a big rally that we've seen. So the market once again facing a hurdle around 18,750 upwards and now below 18,700 itself. Just keep an eye on a couple of these mid-caps which are doing well. Godrej Properties has extended its rally, has moved to the high point of trade. Dixon Tech is the other one, which is up 4%. In fact, all of this week that stocks rallied about 12% itself. So individual stray stocks still doing well, even as the market is lower. Time to get in Nimesh for our favorite D Street Chatter. Nimesh, what's the street speaking about today?
Mangalam, a bit surprising the way the Nifty has collapsed 60 odd points. But the bigger drag is coming in the Nifty bank, and that's the financials which are tracking the markets down. But again, the feedback is for the third day running, there is basket buying at a leading FI desk, largely in the large cap names. It's X of financials. But barring that, there is for buy flows. That's overall feedback. Even from a liquidity point of view, towards the end, in the last 30 minutes, there is a market close basket buying in some select names. So maybe you'll see some reactions. I guess Dixon could be part of it, and some stocks will do react on the back of those flows. But I guess from a sector point of view, the rate sensitives continue to do well. Even in today's trade, in a weak market, something like a Godrej Properties is up 4%, and there is a bit of momentum as well in the real estate names. But I guess tomorrow the FTSE and the sensex rebalancing will have a further impact in terms of flows. The net inflow is going to be close to $270 million as far as India is concerned. So that's something we'll need to track on some individual names as well. But having said that, while the Nifty is down 60 odd points, it's largely tracked by the financial names. But the buying continues from the larger FIs. That's overall feedback.
All right, and individual stocks, let's drill it down to the individual ones.
So in terms of individual names, the first stock on my list today is L&T Finance. That stock is buzzing in trade. In fact, all of this week, in the last 10 days, this stock is up 14% and on good volumes as well. I believe a big change in terms of a senior management is likely to get announced very soon, and hence the street is excited on L&T Finance. So that's the first one. The second stock is PNB. That stock is under pressure today on the back of overall selling pressure in the financial names, but there is buying flows from larger FIs in PNB Bank. And remember, this is one stock where, because of the FTSE rebalancing, there's going to be an inflow of close to 4 crore shares. So that's the reason why PNB is chased a bit by larger FIs today. The third is a basket of both HPCL and BPCL. Both are doing good in trade today, good volumes as well, and backed by FI buying as well. In fact, today there was an interesting note from JP Morgan. The global team of JP Morgan has cut the crude forecast to $81 for CY23, and they believe that OMCs are in a sweet spot and they should do well. So that's the reason why it's part of my chatter list. And the last is Asian Paints. In a weak market, that stock is holding on, good volumes as well. There are buy flows as well at FI. So the delivery volumes are expected to be quite high in Asian Paints today. So selectively, stocks markets are doing good. But it's the bank Nifty which is dragging the markets down again in today's trade.
You spoke about a lot of stocks. L&T Finance Holdings is something that you've spoken about. In the F&O space, there is a fair amount of build-up out there on the long side. The open interest as a percentage of overall market-wide position limits yesterday was 92%. Today, the open interest addition is close to 3%. So that means the overall open interest crosses 95%. So if that happens, it will enter the F&O band today. If that happens, then we'll most definitely keep an eye on that.
That's something we need to track. If the stock gets into an F&O band, probably you'll not see a big surge from there on. So that normally happens when the stock enters an F&O band. So it's a good data.
All right. Back to you guys in the studio.
All right. Interesting, guys. Thanks very much for that interesting list as always. We'll keep an eye. Mitesh is with us with what to buy or sell today for a quick reverse trade tomorrow. Mitesh, a little lower from when we spoke at 2:30. What are your picks? What are your trades?
I have one buy and one sell. Again, a banking name on the sell side, that's HDFC Bank. STBT here with a stop at 1591, targets of 1560 can be looked at. And Zydus Life is something which has had a very strong candlestick pattern today. Good price volume action indicator setup is good. So BTST here with the stop at 544 for targets of 556.
Okay, got that, Mitesh. Thanks very much for the trading calls for today. And we'll see you with all the market action tomorrow. Well, let's look at some developments with respect to index changes. India could perhaps receive net inflows to the tune of $250 to $270 million. This is because of the FTSE index changes that will be coming into effect from tomorrow. Vivek, as always, is the man with all the details. Vivek, so tell us a little more about these changes that we're anticipating tomorrow.
Well, that's right. So, tomorrow 2 rebalancing trades will happen. So, FTSE as well as sensex, constituents will change, especially in the FTSE. As you mentioned, India is likely to get inflows of close to $250 to $270 million. These are estimates as per IIFL Alternative Research. Now, 2 stocks to keep on the radar. These are inclusions into the FTSE All Cap Index. And so, Medanta will likely see inflows of a little over $8 million tomorrow. And Piramal Pharma will see inflows of over $11 million. Apart from that, select stocks which are already part of the index but which are seeing weight increases. So names like Wipro, almost $20 million worth of buying to be seen tomorrow. PNB, almost $14 million. And even Varun Beverages, over $12 million. Other than that, slighter weight increases will be seen in names like Samvardhana Motherson, Godrej Properties, ONGC, Solar Industry, Adani Transmission and Adani Enterprises. Apart from that, when you're talking about the sensex rebalancing, quite a few stocks, but some of the names that we should keep an eye out for are the HDFC twins. Both HDFC and HDFC Bank will see slight weight increases, while on the other hand, IT names like Infosys and TCS will see a bit of sell-off, selling pressure in tomorrow's trading session.
Okay, got that, Vivek. Thanks very much for all of the details there. So we'll watch out for those FTSE changes. Quick break right now. We'll come back with the market talk on the other side. Welcome back. Hero Motor is now looking at more pressure, almost 3.5% gone from the stock now after that exclusive that you saw with inputs coming in that the Corporate Affairs Ministry has initiated some sort of an investigation into the company. That's the stock under severe pressure. Bank Nifty is no better, 550 points gone from that index as well. Well, earlier in the day, we caught up with Pankaj Tibrewal, Senior Executive Vice President and Fund Manager Equity at Kotak Mahindra AMC. Got his outlook on the market as well as a whole host of sectors that they like.
Structurally, we are positive on the entire revival of manufacturing, and this time it looks real. And when we analyze the previous cycles, we believe that the cycle lasts for anywhere between 5 to 8 years. In our view, we are in the second or the third year. And normally in the previous cycles, we have seen that margins double, ROEs triple, and valuations actually quadruple. Though on headline valuations, most of the stocks are looking expensive. BSE Industrial Index has seen a sharp run-up, about 42% on the last 12 months. And most of the stocks are at near all-time high. So maybe in the short term, it may take a pause. In the near term, we believe that there will be softness, there will be weakness. And that's what the stock prices are showing. They are consolidating. But if you take a 3-5 year view, these dips will be presenting itself as an opportunity to increase exposure whenever it warrants to. It's gross margin expansion as one of the themes. And it's played out to a larger extent on FMCG. But I think it's still yet to play out in cement.
Okay, that was Kotak Mutual Fund and the themes and the sectors that that house likes in the market. Amrish Baliga is joining in. Amrish, thanks for joining in. Before we talk about your specific stock pick, just want to get your sense on Hero Moto. Right now, the stock is reacting to adverse news. But otherwise, what is your sense on this one within the two-wheeler pack?
No, see, I mean, if you remember, there was an IT raid in March last year. So when such a thing happens, especially to a top group, then you can assume that there's no smoke without fire, because even the government agencies will be doubly careful before raiding a group like this. So that's clearly a sign of that one should be a bit cautious, and that was there for the last 1 year. So surely, now since this has come, clearly it is negative, and I think the stock can really fall further from here. Because if you see the last month and a half, 2 months, it had rallied from those levels of 20 to 2300 levels. So I think it can go back to those levels. And if you're talking of two-wheelers, here my pick is still TVS.
Okay. Amrish, I think you have travel on your mind, seems like. You have VIP as your pick.
Yeah, exactly. So, VIP clearly is the leader in the organized luggage industry, and it has about 10 manufacturing facilities in India and Bangladesh, about 11,000 retail sales points in about 1,200 cities and towns. But if you look at Q4, there was an exceptional loss due to fire in the Bangladesh plant, which has now been set right, and because of which they had declared a net loss for that quarter, but the outlook is still quite bullish. If you look at the gross margins, they had expanded by about 459 basis points in Q4. It had gone to 58% despite the higher input costs. And this is clearly because of the economies of scale. If you look at the total volume which they manufacture in-house, that's about 70%, which was much lower earlier because they used to outsource from China. That's reduced quite a lot now. And if you look at the travel industry, that's been booming. So naturally, it percolates down to the luggage demand. And if you look at the exclusive brand outlets, they have about 500, which is expected to go to about 800 in the current year. So looking at the next 3 years, CAGR in revenue, I'm expecting about 16%. FY25 expected EPS is about 19. So my target is 855 for VIP Industries.
Okay, so that's a stock pick on the mid-cap side of the market. Just looking at some more names that are moving around. Some of the tier 2 financials are actually doing better today than frontline banks. By tier 2, I mean names like IDFC, IDFC First, which is up and about. L&T Finance Holdings has had a decent session today. It's up 4.5%. If you go to the digital payment space, and Paytm is, by the way, having another good run, 3.5%. Paytm has had a great ride this year, a 70% sort of gain in calendar year 2023. That's the Paytm story. Your sense of the selling that we're seeing on large cap banks, Amrish, whereas some of these mid cap names are doing better, anything that you like in tier 2 financials?
No, tier 2 financials, if you consider IDFC First among them, yes, I'm still bullish on this stock. And in fact, I see this, going to those 3-digit levels, which we have not seen after that merger. So, in fact, I have a price target of about 105, 110 for IDFC First. And if you're looking at the banking pack overall, especially the large caps, I believe that the NIM expansion has already happened. I think from the next quarter onwards, we will not really see that. So upside for the large cap banks, I think is more or less done. I think it's a good time to take some profits off the table.
Any other sort of ideas, Amrish, recent or once you've kind of given out in the past, you would like to revisit? Anything?
The one idea which I've given recently, I think about 4-5 weeks back, is KC International, which has anyway run up decently well. But I still maintain the price target of about 612. So I think we should reach that possibly in the next 2 to 3 weeks.
Look at, you're talking about KEC. We had, by the way, we also had the KEC management. With the KEI management join us yesterday on Bazaar. It was up 5% yesterday, and it's up another 6.5% today. So that's KEI Industries. Look at that sharp move, and I think a lot of it has come in the last 60 minutes of trade, although I think there's a bit of a drop-off as well, which is coming through. I think we'll end with the 70-odd point cut. Amrish, thanks very much for joining us. Good speaking with you, as always. Thank you for your time. We'll end lower, and let's just sort of map the move today. So you basically had, the open, which was actually absolutely flattish. Then the market ran up all the way by about 10:30 to the day's highest point, which was, I think, at about almost 18,800. And then the fall started, the first fall all the way to about 12 noon. There was an attempted recovery, but a short one. And starting 140, the final fall, which basically is led us to where we are. We don't close at the day's lowest point. That's at about 18,670. But about 15-20 points off it. So that's the final kind of picture as far as the Nifty is concerned. The Nifty Bank will end decisively under the 20-day moving average. I don't think there is any confusion now, because last 4 or 5 days it was, 20 points here or there around the 20-day, but this is now decisively lower. The next level in many ways is 43. Actually, we're almost there. The 40-day exponential moving average, I'll have to update the numbers, but I think we'll end somewhere around the 40-day exponential moving average, which is the next level after the 20 days has been broken decisively. They're all close by because the market has been flat for some time. Averages have moved up and all, condensed around similar kind of levels within 2-3%, the near term, the short term moving averages. Surabhi.
Well, Prashant, not such a great day for the large caps, but mid caps not bad at all. The headline index will tell us that it's only a 0.2% sort of an increase. The advanced decline ratio is also negative, favoring more of the declining stocks than the advancing ones. But look at the kind of names that have moved. An Avenue Supermart 6.5% up. Dixon is up 5.5%. Tube Investments 5%. Poly Medicure 12%. Then you have the graphite electrode plays, HEG. We were discussing the stock just a while back, 16%. Graphite, 5.5%. So, the way I'm reading out this list looks like there was absolutely no problem with the mid-cap market whatsoever. A couple of other names that really stand out. Of course, all the hospitals. Remember, we were speaking with some of the names like Narayana Hrudayalaya earlier. So that was up and about as well. In fact, Apollo on the large cap side of the market managed a pretty smart gain, a 4% gain on Apollo Hospitals, but the others, Narayana up 7%, Fortis up 4%, very, very strong day for the hospital stocks as well. So all is not lost in the mid-cap market for sure. A lot of the tier 2 financials as well, like L&T Finance, also managing to go home with decent gains, 5% up on L&T Finance as well. So let's see, the mid-cap party is still on, but on the large cap side of the screen, we have had a bit of a shakeout and some very prominent selling on banks today. We'll see how this plays up and whether we can come back with more decisive moves tomorrow, last day of the week. But for the time being, it is a wrap on this edition of Closing Bell. So from the entire team, thank you very much for being there with us. But don't go anywhere, because our Thursday special big deal is coming up next.